All right, welcome everybody to our November webinar. We've got, or actually, was this still October? I guess this is our October webinar. I'm already getting ahead of myself for the year. Starting to get so close to the holidays, but very happy to welcome Tony here from CredHub. So, I have been working with CredHub for a number of years. Great to have you on. How you doing today?
I'm great. End of the week here, end of the month, and ready for the weekend too. We were talking earlier. I think we were both at NARCM National last week, and still trying to unbury from that a little bit.
Yeah, that's it's always tough getting caught up here after conference season because it's been busy this year. But glad that part of the year's over. We can kind of relax and do some of these more relaxed webinars and stuff instead of traveling all over the country. So this will be great. Looks like we've got some people already coming in. We're also live streaming to everybody. So we'll jump right into some great content for everybody. I think everybody is really going to enjoy what we got today. But let's start off just with introductions. Tony, I obviously know who you are, but how about you introduce yourself and tell everybody who CredHub is also, and kind of give us your background and how you got started here in the industry.
Yeah, so I'm Tony. I'm the president and COO here at CredHub. I've been here for about 2.5 years, but that time has flown by. CredHub, we help both property managers and residents alike by reporting the rental payments to the credit bureaus. And I'm sure we'll get deep into this topic in a bit too. But, I've been around the industry from residential backwards to commercial too. And so real estate's been a real passion of mine for, going on 15 years now. And, it's been fun going through different facets of this, and kind of landed here with CredHub a few years ago. Like I said, helping to build a product that I am pretty passionate about. It's something that's really important to individuals, but it's also a good product that helps the property managers and the owners too.
Excellent. Yeah, I've been, I believe, if I remember right, I think I started with using CredHub for my property management company just before COVID, if I remember right. So
yeah,
sort of this weird coincidence that just as everybody was starting to get worried about delinquencies and everything, we were just rolling out CredHub and starting to use real credit reporting. So we've been doing it for 5 or 6 years now. So big supporter, but want to get the word out there and also just talk about why credit reporting is important in general, how we can use this, whether you're using CredHub or anybody else, why this is an important topic. So let's start off with talking about using credit reporting to help kind of drive behavior. So, for those who aren't really that familiar with what we're talking about here, which is probably most of our listeners today, if they're tuning in, what exactly is rent reporting to the credit bureaus, and why is this becoming kind of such a big topic in the industry over the last few years?
What we're doing is we're taking kind of the payment history activity from that tenant's ledger, and we're looking at it and preparing that to send it to the credit bureaus. And so just like you would see on a credit card or anything else where, you may have balances or past due or anything like that, we're preparing that data to send it to the credit bureaus. And it's important for a couple of reasons. One, the residents themselves, when you're qualifying your tenants, Todd, what's kind of your threshold? How many multiples of rent do you have as a threshold? Maybe 2.5, 3?
3s are for our normal approval. Yeah.
Yeah. So if you kind of backwards that's a pretty high percentage of somebody's income. And, traditionally, they're not getting anything for that other than the pleasure of having a wonderful space to live in for the next month, right? So unlike a mortgage or anything else like that, where you're building up your credit history, you're building up your profile, you weren't getting that. So, and we'll talk more about this too, but the Vantage and the FICO models started implementing rent reporting trade line as its own trade line, its own category. It's always been there, but it's actually a category now that's factored in, and that will help to bolster your history over time, just like having a credit card. So there's really great positive benefits for the resident, aka the consumer, then to be able to, get cheaper insurance, maybe get better loan products, things like that, set them up for housing in the future too, whether it's a future rental or a mortgage. On the flip side, for the property manager, it's a really good tool that they can offer as an amenity to their property. But also, when we look at CredHub is a bit unique in the industry. You mentioned earlier that some folks, there's other competitors that do this, and which is wonderful. It's more people, more residents that are getting reported, and that's fantastic. A lot do what is coined as positive only, and meaning that they only report when it's good. And so it's paid on time and that's it. They don't report what some might call full file or complete reporting, which is the good with the negative side of things too. So if people are late or delinquent or severely delinquent or post-eviction, pre-collections type of thing, that's what we also do. So it becomes a helpful tool when you look at your delinquency management as a property manager, which, the sooner you can collect cash, the easier it is on everybody.
Yeah. And I mean, that's a topic that I've kind of harped on for a while. I think it's probably 6-9 months ago or something. I wrote an article for our newsletter talking about the importance of actually doing both types of credit reporting, because just doing positive only is not only is it not giving you the full benefit of, what we're about to talk about, which is influencing resident behavior, but it's also kind of presenting an incorrect picture of that tenant's credit history. So when a future landlord looks at it and all they see is the positive and there's nothing there for negative history that was actually the case, we're kind of, almost being dishonest to a certain extent when we're operating that way. So doing full spectrum reporting on all of our residents is actually being the most honest we can be and helping, kind of pay it forward to other landlords and property managers down the line. So I'm a huge supporter of that. But kind of talk about how using both, full spectrum reporting actually helps to influence that resident behavior and actually reduces delinquency and everything. What have you seen from how that's beneficial and how much help that does?
Yeah, when we look at our entire portfolio that we have as customers, we've seen on average with higher delinquency issues that they've reduced their delinquencies by up to 50%, which could be meaningful because, if you're creeping into double-digit percentage delinquencies and you can cut that from 10 to 5%, that's huge. But it's not just big from a cash flow and balance standpoint, it's also big from your property managers aren't chasing all those balances. They're getting that time back to do the other things that are important, which includes leasing more space, being active with their residents, and taking care of other things besides having to necessarily work on that. So what we have seen not only is that the delinquencies tend to trend downward, which is fantastic. We've also heard from several of our customers that tenants are paying early, which, I mean, we had one group that said it was unheard of for tenants to have paid early. And, just by having this tool in place, tenants are paying early, which is great for everybody. The tenants get the benefit of that, that positive side of things getting reported. The property managers are not having to chase balances. And, it's a pretty economical product overall to have this powerful tool that helps to influence that behavior. And then as tenants start to see on their credit report, it building over time, which actually happens pretty fast, believe it or not. We've did some cohort analysis before, and we've watched residents go from as low as like a 450 up into the low 600s within a few months. Now, that's a wide range, and that's not where the average is that are, you see from any of the bureaus kind of put out, but we have seen that, and that's impactful. That's the difference between not getting a financial product and being able to get a financial product. And then as you kind of push people up further into their credit scores, that's where you really get products that are more economical, lower interest rates, maybe lower security deposits on future rentals, things of that nature. So all of these things, people understand that more, I think, today than they ever did. And knowing that there's this incentive, not just this incentive that, a de-incentive in terms of it's going to hit my credit, and it's going to be a problem, but there's an incentive to help themselves out too. And I think a lot of folks like that.
Yeah, I think another thing that kind of gets lost here is this isn't just about helping the property manager and, providing the benefits to the tenant of the improved credit. It's also the fact that from a churn perspective of clients, when I look at what causes our owner clients to churn, what is it? It's always going to be something like the resident's not paying their rent on time. And,
Right.
especially to an accidental landlord, I mean, that's not going to impact an intentional investor that much. They're used to it. But when you're dealing like us, our average client is an accidental landlord, they get really worked up in a lot of cases if they don't see that rent hit on time. For them, that's a stress builder. That is just going to, make them anxious the entire month until they see that payment roll in. And if we can do something to prevent that from happening and making sure that the rent hits on time every single month, that's a stress reducer. It's, everything to help that client. And that's going to reduce churn. That's going to keep your door count higher. That's going to stop you from losing those owners when that's going smoothly. So I think people forget about that aspect of it. But, as we're talking more and more about reducing churn in the industry, I think that's an important point also here.
That's fantastic to hear.
Definitely. Let's talk about the resident retention side of this. So you mentioned briefly about how residents can get such a big benefit from this. And what I've seen kind of as a boost to someone's score is, somewhere around 70 points is probably like an average that we see that people get after the first 3 or 4 months, somewhere around there, they get to their credit score. And like you said, I mean, someone who's sitting down at the very low scores, that's obviously going to help them. But when I look at it, I'd say probably our average tenant is coming in with like something like a 600 credit score. That's probably pretty typical for us because we manage everything from A to C. So if you have someone coming in with a 600 credit score and then you're helping them to boost up to 670, 680, well, as well as I do, once you start to get there, now you're really starting to get some good deals and everything on credit cards, on car loans, on everything else. So, how, kind of talk about that, about how this is really boosting not just the tenant's credit, but your relationship with that resident and, how that's kind of building trust and everything between you and them. How do you see that?
Yeah, I think, that trust factor between you as the property manager and the tenant themselves, you're layering in lots of things that you're already doing. This is just another facet of that to help you. And if you're being fair and equitable across this and everybody is getting reported and, it might be the good, bad, and the ugly too, but if you're doing that and you're reporting and people are getting this benefit and they're seeing it, lots of folks have credit cards or other types of ways to see their credit score really easily. And they can see that happening every month. They're looking at you as kind of a hero, I think, and they're seeing that their credit score might go from, let's say, a 600 to 650 or 670. I mean, those are real numbers when you start, and as you start getting up past 650, that's really where things get interesting for you in terms of the products that you can get when you need a loan, when you need a better credit card. And, ultimately, if you're going to move up, into a different neighborhood, maybe a school district or anything, Todd, you have the stratification from A to C properties, and maybe somebody wants to move from a C to an A. There's a different qualification on that because your investors are looking at different qualifications. And if they can move a property that's more desirable, this is one piece that helps that too.
Nice. I had seen that you guys posted something recently. I think it was on LinkedIn, if I remember right, that I saw you guys posted a case study from a company, United Properties of West Michigan, where you had done an actual case study on how this has kind of impacted things for that company and their residents. Can you kind of talk a little bit about what you guys found from that case study? And I would encourage everybody. Was it LinkedIn? Is that where you guys had posted that? Do you remember?
Yeah, we posted on LinkedIn. We also put it on our website too at credhub.com, and you can find that case study in there too. University Properties of Western Michigan, they came to us and they were having problems with delinquencies and getting payments made on time and a few other things too. And it wasn't long after implementing this that they had taken their on-time payment history up into the 99%, which is huge. I mean, you're not following up. And we always talk about, yeah, it's great that you get this revenue from late fees, but late fees are kind of a deterrent for being late. And it's kind of a compensation of, your team having to call and email and chase this too. Whereas if that's taken away, it makes everything much more seamless. So they use Rent Manager, and our integrations are really deep with a lot of these property management software. And we can talk about that in a bit too. And so they came to us and said, hey, we got some problems and we'd love to use this as a tool to help us with our delinquencies while also giving our other tenants something positive there too. So we did a pretty fast implementation with them, got them going, and like I said, some of the outcomes were that they were over 99% collections rate, better cash flow, timing, that's reducing risk too. Overall, they were really excited about what we did to help them.
Nice. Yeah, I would encourage everybody to go and take a look at that. I mean, any property manager obviously knows intuitively that, if you get your delinquency rate down to 1%, and you're collecting 99% of rent in a month. I mean, I have a client out in Oregon who actually accomplishes this, and I'm always amazed every time I see her scorecard, every time I meet with her as a consulting client, and I see that number, because that's so rare. I mean, that's incredibly rare for a PM company to be able to pull that off, or for any SFR operator to be able to get that kind of on-time rent collection. It's amazing. So, use those tools that are available to you, people. I mean, you've got these kind of tools to try to drive towards that. Use it. It's going to help you.
Okay. And I was just going to add to that, and they're not a small operation either. I think they manage about 170 million right now. And so it's not a small operation. So when you talk about that 1% delinquency rate, that's impactful.
Definitely. Let's talk about credit, just kind of in general here. So, there's actually been some talk about this recently. So obviously, probably most of our readers are familiar with Peter Lohman. He's got a newsletter he puts out. It's fantastic. I encourage everybody to take a look at that. He's also a speaker in the industry. He's kind of talked about this a little bit recently, with concerns that, number one, are we going to be able to keep using credit to screen tenants? So he's been talking about that subject, but also just about credit in general and how these kind of models are changing and everything, and how it's not just the traditional old FICO model and all that kind of stuff anymore. So how does rent reporting actually affect a resident's score under these new models? So we've got FICO, Vantage Score. What are these different models? How do they impact tenants differently? What do you see from all that?
Yeah. This is a very deep topic that we could talk about for probably a few hours. It's also funny you bring up Peter Lohman. So I'm in Columbus, Ohio, and he's in Gahanna, which is kind of a suburb and just not far from me, actually. And his group is here locally too, which is funny. FICO and Vantage. So FICO is their own model, and Vantage is kind of the bureaus working together to create a common credit score there. Both of them, in Vantage 3.0 and then later 4.0 as well. And then FICO in FICO 9, they really started to say, hey, this rental trade line, we're seeing a lot more activity, and we also think that there should be more activity on it. And so we can bring that in as its own kind of category, just like a credit card or an auto loan or anything like that, and have its own weight to it. And then now it becomes just as any other credit card would be a factor to your credit report. So now we've got everything kind of set up. We've got folks reporting in, and at this time there's very few, probably under 1 million residents being reported at that time. But we've got this stage set. FICO, Vantage, they're using this as a real piece of their scoring model. Now we get more and more data in there, and now the models are evolving. And so just starting out with both those kind of scoring, people are saying, okay, well, if the credit scores are increasing and getting better, is this true? What's the risk side of this? Does this really mean that these are this is indicative of somebody that pays on time, that can pay on time? And what you can see is that the model hasn't changed and regressed, and so it stayed the same, which means that the risk is appropriately there. People, banks that are lending, when you talk about mortgage financing, when you talk about auto loans, then when you talk about other ancillary kind of financial products, call it insurance or anything like that, are looking at those models and saying, okay, they're legitimate, they mean something. If you now kind of move forward to like the FICO 10 and what's called the FICO 10T, you might have heard that some government releases recently that said, you guys, Fannie Freddie, you can use the 10T model, FICO 10T, as a good indicator for underwriting these mortgages. Well, what is 10T? 10T is trending. So instead of just this kind of credit score that's a snapshot in time of, okay, based on your history, this is where you're at today. It's more about where you're trending over time. And so that score could be a little bit higher because they know where you're going based upon where you've been. And so this is a really interesting thing that's, I think, really new. And I'm interested to see how this evolves over time and where this goes, because it's more about, the reason why we look at a credit score is we think that it predicts, past history predicts future activity. And this is now telling you, okay, this is where you can feel like they'll be safe over time because their credit score is relative to this in the future. So when you look at that from a screening side and you use these factors in there, and if you were to start using 10T, which I don't think any real tenant screening yet uses that, it's going to give you even more forward-looking type of credit score. So that's kind of the evolution in a nutshell where these credit scores have come over the past, 7 or 8 years.
Interesting. I had not heard about that. That's an interesting model. I mean, I like that because just a traditional FICO score, like you said, is just like a snapshot in time. It doesn't tell me what was their score 6 months ago, what's it going to be 6 months from now. So I kind of like that. That's kind of a new take on credit, and it makes sense because, if you're anybody who's had to repair their credit at any point knows that's a long, slow slog trying to get yourself, from, down in the dumps all the way back up to, 700 plus, and, getting a little credit for getting from, where you were to where you are is a fantastic thing. So, I mean, I love to see that. And I hadn't heard about that before. So that's interesting.
And it kind of goes back to what we were talking about earlier with, residents that are tenants, that are renters, they don't have other factors that are impacting their credit score as heavily. So when you get a rental trade line on there where, your rent is $1,000 or $2,000 or even, $3,000 a month, that's like having a $3,000 credit card that you're paying every month. That's a huge number. So when you talk about here's your available balance and how much you're using and you're paying on time, this is more impactful sometimes than, maybe a small credit card or anything else. And, if you have mortgage, I have mortgage, that's huge. When we started getting our mortgages, we saw our credit score go way up. That's kind of the same thing that happens here with the rental trade line.
Interesting. What are you seeing that you see coming down the pike? So, I mean, for example, we've all, I think, seen what Peter had listed in his newsletter about there's, I can't remember which state it was. Maybe it was Michigan. I can't remember which one, trying to basically stop property managers and landlords from checking credit. I mean, we've seen that before in limited circumstances, during COVID and those sorts of things. But what are the trends you're seeing, either legislatively, regulatory, just consumer, advocates? What do you see out there that you think property managers kind of need to be preparing for when it comes to credit?
Yeah, I think legislatively, we're seeing more and more. We've seen it a little bit at the local level, call it the county level. There's some counties and municipalities that some of our customers are in that we have to work with, and they've built some legislation. And I'll talk about what that means in a moment. But then probably the biggest one recently is California, almost exactly a year ago now. But if you back up even further, some of this fire was set from Fannie and Freddie. And so all of that is that you must offer opt-in, positive only credit reporting. And so all of these are very similar situations. Fannie and Freddie kind of had the framework they built, and that they kind of subsidized for a good bit, and I think those are burning off now. But California implemented this law November of last year, and then you had to be compliant by April of this year, that said you have to offer, if you're a property manager, basically if you're not the single owner property manager type of person, you have to offer opt-in, positive only credit reporting. And we're seeing other states, we watched Nevada take that exact same law, copy and paste it, and change California to Nevada. It didn't make its way through. It didn't get all the way through. It was kind of funny. But we've also seen it, in Washington. We've seen it, and there's something very similar in New York right now. We see a lot of this happening. And what this is telling us is that people think that credit reporting is here to stay for a long time. And so when you look at credit scores and, we've heard of other lenders using other things where it's not the credit score and maybe not using credit score for tenant screening and things like that. I don't know that that can fully go away because we still all want this kind of measurable thing that we can point to. And if we're seeing legislation help to enhance that even further, I think that we're going to get more and more of tailwinds that are pushing us in that direction of reporting. Now, legislatively, they want to be kind of careful with how they're doing it, so they're kind of easing into it and the opt-in, make it the tenant's choice there, and positive only. Let's not require this. It's kind of silly, how it's positive only, but it's a step in those directions where more and more legislations are putting this together and saying you must do that. So what it's doing is creating more visibility to this. And now we are getting property managers outside of these states coming to us and saying, my tenant's been asking about this and they've been wanting me to add this. We didn't really know anything about it. Can you help us with it and get us going? And so the awareness is increasing because of this type of requirement at both the kind of state and local levels.
Nice. Yeah, a lot of people don't even realize that Congress actually authorized, tenant credit reporting a long, long time ago. I can't even remember when it was. It might have even been the 90s or something. I mean, it's been a good long while where it was kind of this, encouragement even for landlords and property managers. And I'm sure they were primarily probably trying to target multifamily since that's where most of it is, but it really applies to everybody. There's kind of this encouragement from Congress to do this and kind of provide you this little shelter from liability risk from it that, people aren't aware of. Property managers don't know this. And a lot of property managers think, oh, do I have liability risk, or do I have to worry that I'm going to get in trouble if I report things to the credit bureaus? I mean, I'm sure you hear that, question all the time. What is your guys' normal answer to that question?
Yeah, I think the biggest document to point to is the Fair Credit Reporting Act that, as long as you are reporting fairly, completely, and you're not being biased, then you're doing the right thing. You are allowed to report this. It's when, just like fair housing things, is when you start kind of adding bias into there. I'm going to report this one delinquent, but not that one delinquent. And for whatever reason it might be, or I might report these people positive, but not these people positive because I don't like it. That's not allowed. Otherwise, as long as everything is accurate and true, you're allowed to do this. You're protected under the Fair Credit Reporting Act. And then the Fair Credit Reporting Act also gives some space for states and local municipalities to kind of create little ventures alongside that, where that's where we see the California law pop up in this way. And you think, well, shouldn't it be all in, complete, positive and negative? Well, this is the space that they allow in there, as long as it doesn't kind of override what the Fair Credit Reporting Act specifically says. But as a property manager, if you want to report this, you have just as many rights as any other lender, whether it's a credit card or an auto loan or anything like that. You have the exact same rights to report to the credit bureau with or without the tenant's permission there.
Nice. What you mentioned California there a few times, and I've had this question come up from some readers asking about this, especially after I put out my article talking about doing both positive and negative. And the question was, because of this California statute, is it allowed to report both, full spectrum reporting in California, or are you only allowed to report positive? It was kind of unclear to me. Is it mandated that you report positive, but then you're allowed to do negative also, or is it only positive? What's the rule there?
Yeah, this is a very interesting debate that's being had across the board. And so, if you look at the words of the law, it says must provide opt-in, so choice of positive only credit reporting. So it says that. It doesn't specifically say the words you cannot report complete reporting. Now, that said, I'm not an attorney, I'm not a lawyer. I don't know the law. I don't profess to know the law in depth in that way. Plus, it hasn't been litigated in any sort of way. So there's no precedence about what it meant and what it was meant to do and stuff either. So I think it's to be seen what happens there. I had my opinions on what that might look like and what you might do. I think that, we have several folks in California that, we've basically told them you should seek your counsel and kind of talk to your counsel and see what your counsel thinks about this law. And we'll support you in that, because we are not the data furnisher. You are, Todd, the data furnisher. And so we are here as a service to help you with that and help you go through these things. But it's a very, very interesting debate that we're also trying to work with some folks on what this law actually means.
Interesting. Yeah. Always good advice for everybody to go out and check with your local legal counsel on these sorts of things. But yeah, I mean, I just got so many questions about that. I wanted to make sure I broached that with you. Just want to let everybody know, anybody who has any questions or anything, drop those into the chat, into the comments. I'll try to sprinkle those in as we go along here for anybody who has questions that I'm not covering. So feel free to drop those in. Let's talk about privacy issues. So, this is something that keeps coming up, of course, in the modern world. It seems like I get a notice of a data breach like every 6 months or something for something or another, and so everybody, of course, gets the same things. Anybody who has credit, gets those same sort of notices. Anybody who provides their social security number or anything to anybody is aware that these issues are going on. So how do you respond, or how do you recommend responding to residents who have concerns about that, who say, I'm worried about my privacy and about my credit being secure and, being accurate, and, I'm not having identity theft issues? How do you respond to those sorts of inquiries?
Yeah, I mean, first and foremost is that, we do take this security and your personal information, we take that with high regard. We want to make sure that the data is safe. And so all the data in transit is secure. All the data that is at rest with us is secure and encrypted as well. And then, when we send out to the bureaus, it's all encrypted. So we have lots of mechanisms in place to mitigate as much as we can here. That said, is we also don't share that data with anyone else. We don't sell that data. We don't try to provide access to that data to any other third parties. We're here to do one thing, and that's to help the tenants and the property managers report to the credit bureaus. And that is all we do. So there's no, the likelihood of even another third party having access and leaking that is zero, because we don't do that. We don't provide data to other people that includes, that PII. I will say, aside from Allstate, which we have an identity theft protection product too, that's backed by Allstate. And, we're talking about this identity theft. If some folks have elected to add that, and then we provide that data to Allstate, but that's it. We don't go beyond that. We think that the data and the privacy is a really important thing. And so we want to protect that as much as possible. When we look at what we're doing, Todd, is we're not a third party that your company is giving the data to. We are just helping you with this service. So the way that the bureaus look at CredHub here is that we're the aggregator. We're helping to pull this together. Todd, you're the furnisher. So we're almost acting on your behalf. And so this isn't our data, this is your data.
Nice. Yeah, we've had several instances of this. I mean, like I said, we've been using CredHub for a while, and we run into cases where someone will say, oh, the data that you're providing is inaccurate. And, what happens is, our account rep at CredHub, if they get one of these inquiries from someone, they just forward it over to us and say, hey, we've got a dispute on what you guys have submitted. Can you take a look at this and provide us the data? And we do. We provide a tenant ledger or whatever it may be. And, you guys have done a great job of helping us with those sorts of things. We've had cases where we've had a couple of cases of identity theft cases where, it had nothing to do with somebody stealing data from what we were doing. It was just, we had a tenant move in who falsified their identity and everything. And then it actually helped to find that situation, because when we started reporting to that person's credit, when, either positive or negative, and it popped up on that person's credit report, who was the real holder of that social security number, they were able to reach out to CredHub and say, hey, what's going on? I see this on my report. And then you guys reach out to us, and we're able to figure out, hey, we got a tenant in our property who isn't who we think they are. We've got someone who we moved in who provided us a fake ID, fake social security number, all this stuff. And we're actually able to track it down only because we were reporting them to the credit bureaus. And we never would have probably found out about that if it wasn't the case that we were actually doing that. So there's actually some downstream benefits to this from a a credit perspective and protecting people's identities and everything. The more we're actually reporting these sorts of things, the more likely it is that people are going to find out if someone has stolen their identity or something. So we've had a couple of cases of that.
Yeah, and we see that very frequently too. And part of what we do at CredHub is we're kind of the first line of entry for any disputes, bankruptcy notifications, things like that. Our team handles that on your behalf and then kind of gets back to you and helps consolidate that with you, so these folks are filing bankruptcy, or here's this identity theft issue. How do we handle this? Because there are sometimes bad actors that just say this isn't me, it's an identity theft, and we work together. But that's far and few between. Really, what it is that we've found bad situations that somebody has stolen somebody else's identity, and it's a great way for you to get in front of that quickly, so that, gosh, you don't have to go a long time and then they start kind of going delinquent, and then there's an eviction, but who are you really evicting? And you get stuck with a very, very large balance, and then your investors are looking at you like, Todd, what are you doing? How'd you do this? And but yeah, it's I think that we talked about the other benefit as a collective group, as all the property managers reporting. There's all these kind of butterfly effects of, okay, if you're reporting, Todd, to the credit bureaus, then the next PM is going to see that as well and see that on their trade line and see, oh gosh, they're great. They've been paying, the last 24 months on times, 30, whatever it might be. You can see that, and that's really great. Maybe they're not so good with other things, but they always pay their rent on time. And so that's awesome. We talk about this identity theft stuff. It's wicking those people out too. There's lots of other things that kind of come along with this, where as a collective group in this community, if we're all doing this more and more, that we all benefit in different ways too.
Yeah, I love that, because for the longest time, I've long said that landlord verification requests when you're doing tenant screening is next to useless, because the problems we run into there are, I've even seen people on Facebook groups, landlords, who will say, yeah, I'll lie about how good this tenant is so I can get them out of my house. So if someone calls me to verify this tenant, I'm going to tell them they're great, just so they'll leave and go rent from this other landlord. So, this is a notoriously unreliable way of checking on residents when you're trying to screen them. Credit is the perfect way to screen people, because we're getting real actual reports of how people paid into the property management software. So instead of me having to figure out, is this a real landlord I'm talking to? Are they being honest with me? How much information are they willing to give me? Because a lot of times, even if you can get a reference, they're only going to answer real basic questions like they moved in on this date, they moved out on that date, they were a tenant, and you're not going to get real information about how well they paid. Whereas on a credit report, we know it's reliable. So, it's going a much better way for property managers and landlords to be able to actually verify how reliable a tenant really is on their payments.
100%. Something else that's kind of interesting with this too, Todd, is that we talked about the positive only side, and there's, some larger groups that do positive only. And, our stance is you should report everything. We'll always be here to support you. If you want to do positive only, Todd, that's all good. We'll do that with you. It's no problem. But really think that it should be the full, complete reporting. But one thing that we've said for a very long time is, at some point, you're going to impute that these holes mean negative. So if it shows that resident had, January, February, March, April, May, all good, green check boxes, and then June, July, August are blank, and then they moved out. You're like, well, what happened there? And folks are starting to come to me now and say, yeah, when I see on their credit report, I just assume that those are delinquencies, even though it didn't hit their credit score because it's not negative. I assume that that's a delinquency. And so they're kind of like, even though the credit score might be there, they're looking at that as a factor now. And so this kind of notion of, gosh, there's some folks out there that the thesis is, don't hit the resident multiple times, because you're going to hit their credit score as they're going delinquent, and then they're going to get evicted, and that eviction is going to go on there, and collections. Well, as you and I both know, not everybody gets evicted, and not everybody actually goes through the eviction process. They might just say, we're leaving. It's like, okay, you've got this balance on there and we're still going to collect on it. So that not everybody goes down that path. And also, you got some people that you kind of want to work with, but they're still delinquent. You need this tool to kind of keep them on the path. So that idea kind of doesn't hold water now and starting to not hold water. When I talk to some of the screening companies, they're like, yeah, when we talk about what factors impact this tenant, we're starting to look at that history and almost impute from there that those holes mean negative. And so the idea of positive only is good. It might actually not quite go the way that we all thought it would.
Interesting. I'd never thought about that before. That makes a lot of sense.
Yeah.
What are you seeing when you look ahead? Let's say, 3, 4, 5 years down the line. Obviously this has been in the industry now for a few years. Like I said, I've been doing this for about 5 or 6 years now. Robert Locke, who many of our listeners probably know, he's been doing this forever, and he's a big advocate of CredHub. But it's kind of really gotten kind of taken off the last few years as resident benefit packages have kind of become a much bigger thing in the industry. When you look a few years down the line, what do you see? Do you think this is almost going to be like a necessary part of a benefits package that residents are going to start to expect? Are you starting to see it become that widespread, or what do you think the outlook is on this sort of product going out, a few years down the road?
Yeah, years ago, we looked at this product and it's something that we said it's a great benefit. We've always been saying it's a great benefit for the property manager and the resident. It's been a lot of times a great benefit for the property manager. We've got the tool, and then one thing we didn't talk about is, typically there's a cost to doing this, but the property manager is marking it up. And so, there's a little bit of that revenue side of it. We do talk about the resident side too and their benefits, but we don't, until the last couple of years, you're not really hearing tenants saying, I want this. And now that tenants are saying, I want this, like I said earlier, and then the property managers are coming to us and saying, our tenants are asking about this. It's not just one, it's been multiple. That is going to create kind of a more viral effect over time, where residents are just going to expect that this is part of what you do. Just like a mortgage is reported, we just expect that's reported to the credit bureaus. This is going to become an expectation. I do think that over time, there's going to be more and more kind of requirements from the legislative side of things, whether it's the state or your local bodies, that are going to require more and more of this. Most property management software systems don't have this embedded and, don't have this as part of their typical features. And so right now it's just working with vendors like CredHub. And so I think that might shift a little bit too, where they, these property management software systems say, we should have this as an embedded feature with us too. And we're right there too. We've got a SaaS product that works really well to plug in there. But that's where I see things going. I think more and more folks are going to demand it from tenant side. I think that property managers are going to look at this as a great tool. That's the amenity that they must have because of the demand. And then when you look at the delinquency side too, it's very helpful on getting things kind of righted, but then also keep it at that level too.
Nice. Let's talk about the practical aspect of this. So let's say a property manager's out there watching this. They decide, hey, we want to start doing this. What does it look like for the property manager as they start to work on this? And then, what's a smooth rollout look like, for a new PM company who's just starting to work on credit reporting? What do you recommend there? What do you see from the operators that have a smooth rollout? What does that look like from your perspective?
Yeah, our process is really, really streamlined because ultimately we want to get you going quickly, get the data going out to the credit bureaus, and get this, then kind of get in the background. Still work with you, dedicated customer success manager, all that. But we want to get going fast, and then let you and your operations take off. So typically what we do is start with a kickoff call, understand a few different nuances. We have a lot of customizations, and Todd, you can probably speak to this, on how we can work specifically with you and how your data is curated in your property management system. We pride ourselves on our technology and our data integration. We own all of our data integrations. We have built those ourselves. We know everything we can about all of the major property management systems and a lot of the other ones too. We have deep integrations with all of those. So we try to turn this on as fast as we can, get the data flowing, get it into our portal so that you can see it, you can interact with it. This is where transparency between CredHub and you as a property manager comes in. You can see exactly what we've reported. You can make some edits too if needed. The onboarding process typically goes 30 to 60 minutes, maybe some after training too. We go through the first kind of submission with you. Some property managers like to be more hands-on. Every month they want to look at the data, make sure it's good to go before they hit the button. Others are like, my data in my system, my ledger is always up to date. It's all good. Just let it go every month. And we have tons that just auto submit. So we try to get you going pretty fast. All of that time, calendar wise, is somewhere around 3 to 4 weeks from when we sign the contract to when we get your first data kind of submitted. It all depends a lot on your operation and some training. We give you great marketing materials that you can put in with your, other kind of packet, basically your new tenant packet. We give you that. We train your PMs on what this is, what it means for both you on the property management side, as well as what it means for the resident. And then we help you with some other things in your lease form so we can get this embedded and just let it be a normal course of business for you.
Nice. Yeah, for me, I mean, I'm all about automation. So, I mean, we basically just automate this whole, it auto submits, we trust our system and, it happens every month on a set schedule. I can't remember what day of the month we've set it up for, but like you said, it's all customizable. So, when we were going through and getting everything set up with you guys, we picked the dates we wanted it to work, thresholds for when it would report and when it wouldn't, all that kind of stuff. And it's just kind of on autopilot. I don't really have to do anything with it unless there's, somebody who complains that something's inaccurate or something. Then we just kind of let it do what it needs to do after we got it set up, and it runs smoothly as can be. So, I mean, no problems there whatsoever. I would say that, from when you're trying to maximize the benefits you're getting from this and reducing delinquency, like you mentioned, with having materials to give residents and kind of highlighting this program, I think that's super important. Just burying this in the language of your lease that says what's in your RBP, that's not going to get you the full benefit of this. Right. You want it to be kind of like out in front of everybody. Hey, we are helping you improve your credit by using this credit reporting product. And, we're going to report every single month, whether you pay or not, all that's going to go to the credit bureaus. And if you pay on time, as we're sure you will, your credit score is going to get a nice boost. And, put it out there. Make sure that everybody knows about it. Because if you do, that's when you're going to get the maximum benefit out of it, because it's in the tenant's mind. They're thinking about it. They're saying, oh, this is going to help me, or, if I don't pay on time, it's going to hurt me. So, they've got that in their mind at all times. And that's what's going to get you the best delinquency rate, drive that down as best possible. So, so that's fantastic.
Kind of related, I was watching the comments come in. Mind if I address these two?
Go for it. Absolutely.
One is kind of germane to what we were talking about here, with a welcome letter. As part of the onboarding, we give you some language to send out to your residents, both as a letter and as an email communication that lets them know, hey, we're going to start doing this now. There are some things in terms of if you're doing complete reporting that you do need to let them know, hey, you might get reported delinquent. That's just a kind of a CYA for making sure that if you do report somebody delinquent, they knew ahead of time that is kind of a risk of this lending, if you will. So we help you with all that. We give you tons of materials that get you going. And, we don't want this, as you were saying, Todd, we don't want this to be a product that is just kind of stuck in there. And we're like, I don't, as a PM, I don't really know what it does or anything. We want you to be very well educated on it so you can show the benefits of that. When you have all those things in your RBP, you want to make sure that you're telling the tenants, these are the benefits. This is why you have these things. Otherwise, it kind of devalues it. So definitely we help you with all that. And then I think Lakeisha, she asked, what do you do with inaccuracies and what is their process? So mistakes happen. It can be anything from cash didn't get applied properly on the ledger and the time that we pulled the data. It could be that there was a mistake made in any sort of way. We have very great processes to correct that, both today, or from the past or anything like that. There's a particular system that we have to be integrated with. It's called Yosker, but we can go in there and we can adjust any trade line that we have created, of course, that to fix any problems. So if somebody showed delinquent, we can fix that, and usually those updates are live on that consumer's profile within 48 hours or so. It happens pretty fast, as corrections do. So our team's on top of it. If somebody were to put they're going to Equifax and hit dispute, that comes to us. We get alerted. We go into the system. We might ask you, Todd, hey, or your team, hey, they're disputing this balance. Is this wrong? You say, oh gosh, there was a mistake made. Can you fix that? Can you take that off their report, and we can change it? And it's all pretty fast. So we take care of all of that for you.
Nice. Yeah, I mean, I think it's important to point out, because I mean, people get really nervous about this. Some property managers, when I talk to them, when you start talking about credit reporting, they get really nervous. And I think it's important to point out that, like you said, occasionally mistakes happen, and we just made an incorrect entry on a tenant's ledger or whatever the case may be. It's not the end of the world. It's not
Right.
like the FTC or somebody's going to show up at your doorstep, with a $250,000 fine or anything. That's not how this works. If something's wrong, like Tony said, you can just fix it. You can fix that very quickly. And we've had a few of those here and there. It's very rare because of, if you're keeping your property management software where it should be accurate, but everybody makes mistakes, and it's not the end of the world. So don't think that if you make a mistake on this and someone's line is a little bit off, that you're going to have some massive fine or something. You just fix it, and everything will be fine and move along. So don't let that sort of fear discourage you from doing this, because it's not as bad as you think it is.
Sure.
And it looks like we got another question. What if, let's say you either offer this as an opt-in, or you're in a state where it's got to be opt-in. Can a resident sign up and opt into this, and then 6 months later they say, you know what, I've changed my mind, I want to opt out and no longer have credit reported? Is that something that's possible for you to do, or how does that work on someone's trade line?
Yeah. So for California opt-in, the law also requires that you allow them to get out of that if they want at any time. There is then you can't get back in the pool later. There's a time frame that you can't kind of sign back up, and we have to bar them out of that. So once you're out for a while. But with California's opt-in, you do have to allow them to opt back out of it, which is really straightforward. We handle all that stuff. It's kind of unique how we do it, where the residents are signing up with us directly, but we still have a partnership with you as the property manager, and we're getting the data that way, which that's a whole another conversation we can have another day about what's called consumer provisioned data and kind of where the credit bureaus are going with that. But at any rate, to answer the question about signing up, if it's an opt-in, they can opt back out of it at some point. On the more traditional method, and Todd, kind of what you guys have, it's kind of everybody's in and everybody's there, and you're reporting everybody, and there's really no opting out from that standpoint. Now, on the off chance that you have a particular exception for some reason, sometimes the timing of when you start reporting and such, maybe somebody's trying to get a mortgage and they don't want anything disrupting their credit report, we can always make exceptions and handle those things too.
Nice. Very good. Very good. Well, I appreciate the questions from everybody. This has been really, really interesting. I've actually learned a few things that I didn't know before the call, so that's always a good thing. Tell everybody, if they want to get more information, if you're a California PM, for example, and you're worried about these new requirements, or if you just want to find out about how you can get going with CredHub, where should they go? Where can they get more information, get a demo, all that kind of stuff?
Yep. Two easy ways. Either you can just email us at sales@credhub.com. It's CREDHUB.com. Or you can go to our website, credhub.com, and hit the contact us and fill out the form, and then we'll get with you very swiftly. So either way you want to go, whether you want to email us directly or go to our website, whatever works for you.
Beautiful. Well, Tony, I really appreciate you joining us today. This is fantastic. I think it's been about a year since we last did one of these, and it's always good. I love to get the word out on this, because this is one of my favorite things in our RBP. I think it's great for us. It's great for our clients and our residents. So It's, one of those things that just benefits everybody. I love it. So it's great to get the word out. Thank you for joining us, everybody. That's sales@credhub.com if you want more information, or just reach out to us. We'll be happy to put you in touch with Tony or anybody else over there. Everybody obviously has my email because you're getting all our stuff. So just let me know. I'll get the information over if you can't reach them for whatever reason. But thank you. Have a great Halloween, Tony, and a great weekend. And we'll see everybody later.
Thanks, Todd. Thank you.
Of course.